Hey everyone, welcome back. So in this video, we're going to go over possibility of a housing crash, right? So we want to take a look at some of the data. I've seen quite a few people on YouTube, namely Stephan. I'm sure you guys are aware of him. He's done like 4 videos in the last 4 weeks on, the housing market is going to crash. We've also seen it from Kevin, Meet Kevin. So he's done a couple videos on it as well. So I wanted to take a look at the data behind it all, not just going by what YouTubers say. So some of the things we're going to look at here are the housing market data. We're going to look at some actual housing, houses for sale as well. And as always, my financial advice, you guys know the drill here, and do your own research as always. But here's what I'm seeing as far as possibility of what's going on in the market right now. So after seeing those videos from Meet Kevin and Stephan, I started doing a little digging into the data, looking at the area that I live in. I'm west of Chicago, and I wanted to see what's going on in Chicago, and I also wanted to take a look at what's going on in the suburbs a little bit too. So here's the first house that I saw. I picked a couple of houses that were in different ranges of pricing, so I wanted to see, under $500,000 to $1 million, basically. How long have they been sitting out in the market? And this is just a small sample. There's thousands of homes out there for sale right now, but we'll also get into the data on it. So on this one you can see here that was basically put on the market, and it just came on the market this year again, but it was on the market last year, didn't get sold. It looks like it came out at $650,000 in March of 2021. They lowered the price to $645,000 in July of last year, and the listing got removed at the end of July of last year. Then they brought it back on for sale this year, and it's down basically $100,000 from where it was last year. That is obviously a huge decrease in price in just 1 year. So that's one example there. Next one is for $499,000. This one's also in Chicago, and we can see here that it came on the market in May, at the end of May, at $549,000. They dropped the price in June to $525,000, so about $25,000, roughly $24,000 down, and then they dropped it again here in the middle of August, another $25,000 or so to $499,900. So that's another example where houses have obviously been coming down in price, and we'll look at the data, but I think it's basically because the interest rates are going up. But we'll take a look at it here. But here's another example, one that's for $440,000 in Chicago. This one was sold last year in June, and it came on the market this time around for pretty huge increase. So it sold for $57,000, so it must have been a rehab. Obviously, they had to do a lot of work to it. But they listed it for $490,000 at the end of August, the 27th. And then just 1 week later, they dropped the price by $50,000 on it. So obviously, that leads me to believe that the market is starting to cool down, at least, slow down. That, and then we have one more here. Oh, we got a couple here in a suburb of Chicago, about an hour west of Chicago. This one is going for $549,000, and it was sold in 2020 for $225,000. It came on the market this year in July 19th at $635,000. Now, just 1 week later, they dropped the price by approximately $35,000 to $599,000. Then about 3 weeks later, at August 18th, they dropped the price some more to $574,000. So that's another $25,000 down. And then a week later, they dropped the price again, another $25,000 to $549,000. So we're obviously seeing houses stay on the market longer, and the prices are coming down on those as well. Here's another one in the suburb. So this one's obviously on the high end here. This one's $1.6 million. So it's not only affecting the higher price valued homes, but also the lower price valued homes, as you can see here. So I can't see all of it. Let me see. Came on the market in March of this year at 1.99 million, almost 2 million. 2 months later, they dropped the price by about 100,000 to 1.8 over 1.9 million. And 1 month later after that, they dropped the price again, another 100,000 to 1.8 million. Then 2 months later, they dropped the price down again to 1.65, so 150,000 decrease from that. And then just a week later, we had a contingent, and then it came on the market. So it's at basically 1.65 million right now, starting at almost 2 million. That's a $350,000 decrease in the asking price of a home within just, 6 months? That's huge. That's a lot of, obviously, cash for somebody to walk away from, especially on these multi-million-dollar homes. That's not chunk change right there. So we got that one. We also have this one that's a little bit more reasonably priced at $329,000. We can see here that it came on the market on July at $385,000. Within the first 2 to 3 weeks, the price came down to $375,000, so they lowered it by about $10,000 there. And then just another couple of weeks later, they lowered the price down to $355,000. So there was another $20,000 reduction in that. And then just recently, at the end of August, they lowered the price again to $329,000. So that was another $24,000 or so that they reduced the price on that $26,000 that they reduced. So you can see this kind of trend happening here with the homes, where obviously the prices are coming down quite a bit. And then here's an even more affordable house at $193,000. This one came on the market on 8/11 of this year at $219,000. Within a week, they dropped the price by almost 10%, 9.1% to $199,900. So that was a decrease of $20,000, and then they dropped it again in the next 2 weeks to $193,000, so another $6,000 down from that as well. So that's a cut of about, 20-some thousand, 17, 28, 20-some thousand, 30-some thousand dollars cut in it. So obviously not a good sign for the market, at least not in my area right now. I don't know where you guys are living as far as if you're seeing the same thing in the housing market. The reason I got interested in this is because I'm looking to buy rental property, and with interest rates going up and houses are, they were at least in the beginning being overbid by each other, by other buyers. Now it's coming to the point where houses are sitting on the market longer. It's obviously interest rates are up, and it's taking longer for them to sell. So I'm seeing this kind of trend reversal where we've seen it before, but we'll take a look at the data here that I have for them. So looking at the 30-year fixed rate, this is from the Fed. This is actually a really great website. It's the fred.stlouisfed.org, Serious Mortgage 30 US. So that's up here. So that's the link there for it. But it shows you the historical average of 30-year fixed mortgage rates, average in the United States. So we can see here, obviously, in the 1980s, we were way up around 18%. And we've been coming down ever since then to a bottom of almost 2%, I think, that we had last year. And ever since then, we have been going much, much higher here. We are about 5.3, 5.2, and this is just the average, obviously. So this is based on all the home buyers out there as far as what the average mortgage rate has been. And that is based on your FICO score. So if you have a lower FICO score, you're going to be paying a higher interest rate. If you have a really good high FICO score, you're going to be paying obviously a lot less. So this is the average of that comparison there. So that's part of the data here that we have. So we're obviously seeing interest rates going up, which is going to slow down the economy. It's going to slow down the housing market as well. It's going to slow down people putting in money into their homes, fixing them up, things like that. So that's obviously going to have an impact on housing, along with possibly like Home Depot, Menards, some of the other stores out there. And then also pulled in data from realtor.com. So they have this really pretty good tool here. So it's real estate data, and it's at realtor.com /research/data / you guys can take a look at it here. But they provide inventory weekly, inventory monthly. I pulled in the monthly inventory that I wanted to take a look at. I think weekly would have been just way too much data there. And they have a data dictionary here for what all the data, all of the columns in their sheet is for. So you can basically download it's a CVS file. Let me see here if I do this right. National. So I did the national data, and it does come in as a CVS. Cancel. So you can get that and then put it into your own spreadsheet, which I did here. And you get a bunch of data on here. So you got obviously country, which we're in the United States, and we're getting data from 2016 all the way to basically the last month of August is the most recent data that they posted. And we have the median listing price month over month, median listing price year over year, active listing count. You have median days on the market, new listing counts, price increase count, price reduced count, pending listing count. I mean, you get all this data that's, just wealth of knowledge in here. So in order to make it a little bit easier for everyone and for myself especially, I wanted to pull the data into basically graphs to see how it all shapes up when you're actually looking at it visually. So looking at the median listing price. So this is the housing pricing, the median for the country basically. We can see here that we've been on an upward trajectory ever since 2016. We have possibly peaked, and it was around June of this year at 450,000 per home roughly. And we have been coming down on that. So that is one sign that we could be coming down. But we can also see this, that it happens around June is when we typically peak, and then we go down into towards January, prices come down, and then we go back up, and then towards January again, prices come down. So that's one possible theory here, is that we're obviously getting into the fall. Prices are going to start falling down because there's going to be less home buyers looking to buy right now, especially going into the winter time. So that could be just part of that. But then we look at also the total listings counts. We can see here that listing has been coming down here ever since 2016, the amount of homes that are listed. We have obviously went up quite a bit here in the last couple of months, as obviously interest rates have started to rise up. So they're not going as fast as they have been before, it looks like. We're at 1.3 million homes right now, total listings in the country. And we were at almost 2 million at the beginning of 2016, or July of 2016. So we're still way short of where we were historically based on that. And that has obviously led to pricing of homes going up because the inventory just wasn't there. So it's supply and demand economics at work here. As we're seeing also more supply come on the market, we're seeing prices start to come down a little bit. You got a little bit more battle going on between the, basically the sellers are being a little bit more aggressive in trying to sell their homes because there's possibly more homes out there as well to compete against. So that's the other part that we're looking at it here. We're seeing that pending listing count. So this is the number of homes that are pending. So pending is basically homes that are possibly going to be sold. So there's pending. You have a contract on it, a contingency on it, whatever it might be. These are the number of homes. And we are seeing that falling down here. We did reach a pretty high peak here in 2021 of May. We reached 691,000. And we've been falling down into this year, beginning of this year. We've picked up a little bit here in the summer, but we're obviously falling back down to 520,000 at the end of August here. We were at 430, so as obviously the supply has decreased, the fury of people looking to buy homes has definitely increased over that time span here. That's the best way I can put it. So that's obviously leading us to believe as well, at least for myself, that we are heading downward, at least for the winter time. We'll have to see obviously how it plays out going into spring and summer again next year. But right now, the trend typically is fall towards the winter time, pick back up towards the summertime, and then fall again towards the winter time again. Active listings counts. So these are all the homes that are actively listed right now. We were at 1.5 million basically in 2016. And we've been falling. I mean, you can see this trend line here that we've been falling. We have obviously picked up here in the last couple of months in 2022. We are at 779,000 homes right now. That is the same level that we were at approximately of 2009. So in September of 2 years ago, we're back to this kind of level where we have this active amount of listings. So obviously inventory has increased. So and demand has obviously decreased, it looks like. Now, the median days on market. So this is the median amount of days that a house was on the market before it got sold. And we can see here that it also kind of fluctuates through the year as summer, winter, right, spring, and then you go back into summer and fall. Towards the winter period, it takes longer for houses to sell. We've been at 96 here in 2017. 2018, in the beginning, we were at 90. 2019, 87. 2020, we were at 85. 2021, we were at 71. And then 2022, we were at 61. So we've had this constant decrease in the amount of days that houses sit on the market, especially in the winter times that has decreased. We can also see that in the summer times as well when you look at May, June, July period, we're at 61, 57, 56, 51, 36, 31. I mean, it was just crazy the last 2 years where homes were, they'd go on the market and they would be sold within, 10, 15 days for the most part. And you'd be battling with multiple people trying to put in higher offers, and it was crazy. So we're actually seeing that kind of slow down a little bit here, but that's obviously based on the time period that we are in the year. We're getting into the fall. That's going to continue to rise up. Now, price reduced count. So this is also pretty important here. We saw that back in 2016. We were at 448,000 homes were being reduced in pricing. We saw that increase again in the summertime of 2017. We were at 458. Then in the summertime of 2018, we were around 500,000. But after 2018, things started to go down here. We were at 420 in 2019. 2020, we were at right around 239,000, close to that. 2022, or 2021, we were at 134. And then 2022, we've obviously been going up here. So we're seeing a reversal here happening right now in the number of homes that are reducing their pricing. We can see that obviously from the homes that I showed you guys. Obviously, it's a small sampling, but we're seeing that homes are being in the markets longer. They are taking longer to sell. They are reducing the pricing more aggressively than we have seen in the past, at least within the last 2 years. In the last 2 years was a seller's market. Now it's becoming more of a buyer's market, I think. And with interest rates obviously going up, that is only going to push or fuel this even further, I think. Now, we can see here that in 2016, we had a pretty low interest rate on the average of around 3.44%. It did climb up a little bit here in 2018 to 4.83. 2019, we fell back down to about 3.62 in the summertime. 2020, in the summertime, we were around 2.94. And 2021, in the summertime, we were around 2.84. So they've been kind of steady here over the last couple of years. We haven't seen any major increases recently. But as we've seen inflation rear its ugly head here in the last 12 months, we are definitely seeing the interest rates going up here. So we reached 5.52 on average here. This was probably back in June, since we're already August, July. Yeah, so that would have been June. We have seen it come down a little bit here. We are going to have some more data, obviously, coming out on the CPI numbers next week. That's obviously going to be important for the Fed to decide whether they're going to go up another 50 basis points or 75 basis points. If we go up another 75 basis points, we're going above 6%. The last time we were at 6% on interest rates, if we look at it here, was back, let me see here, this was 6.8. So this was back in 2008. This was right around the housing crash that we had last time around. I don't think it's going to get that bad as it did in 2008, mainly because the banks are a lot more cautious as far as when it comes to lending. They're not lending out loans to people that don't have verified income. Last time I even refinanced, they called my workplace 24 hours before I was signing the closing documents. They verified it a week before, 2 weeks before that they verified it. They are a lot more cautious, and I don't think there's just as much speculation in the market as there was back then. Before it was buy a house, flip it, and you could sell it for $100,000 more than you put into it. So that, and then obviously the unverified income was a big problem as well. You had subprime mortgages as well that were obviously really bad. So this time around, I don't think that's going to happen. I think this time we're going to have a little bit of slowdown. We may come down in pricing 10, 15%, maybe 20% in pricing, which I think would be pretty good considering that we've gone up quite a bit in the value of homes in the last 2 years here. So if we look at pending, where was it? Total listing, median listing price, right? We've gone up quite a bit here from 2016, almost 100%, basically almost. 259,000 at the beginning of 2016 to 450,000 right around the same time period in 2022. So within 6 years, we've gone up almost 100%. So I wouldn't be surprised if we see a little bit of a pullback in it, which I think would be healthy not only for the housing market, but in general, letting people get back into that. And I think once things possibly slow down a little bit, inflation fears kind of go away, I think our interest rates are probably going to go back down a little bit because they don't want to squeeze out or stomp out productivity, growth. They want to be at 2% core inflation, right around there. So if they see any signs of that falling down, I think they will start reducing interest rates, and those will probably come back down to the historical that we've had here in the last couple of years, around 3-4%, which I think would be pretty good. We may see a little bit lower depending on how things go globally, right? There's a lot of stuff that's happening globally that we don't have any control over. We got the stuff going on in Europe, and we got the stuff going on with China. So we'll have to see how all of this plays out. But yeah, my thinking is that we are going to be in a little bit of a pullback in the housing market. I don't know how deep the pullback is. I'm saying 15 to 20%, possibly in the values of homes coming down. We're seeing that already from just the houses that we've looked at here. That's only a small sample, like I said before. So we'll have to see. Time will only tell, but I am kind of right now, at least my plan is to hold off. I was looking to buy a rental property. I am going to hold off at least for a little bit to see where the things end up at. I'll probably start looking back and after wintertime, I'm probably going to start looking back into it, see where the market is at, see where the interest rates are at as well, see if it makes sense. And we'll just kind of keep an eye on this. I'll keep you guys posted, see what I'm seeing here. We'll probably do a monthly update on this just to kind of keep everyone updated. So if you enjoyed the video, I hope you guys did. Hit the like button, subscribe, helps me out tremendously, and that's all I ask of you guys. Thank you so much for watching. I hope you guys have a great Labor Day. Today's Labor Day. Hope you guys have a great Labor Day. I'll see you guys in the next one. Until then.